There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey, welcome to another edition of Hard Money. Darren Long, John Scholes here, Sauga 960. And if you're watching this on the YouTube channel, simply go to Delta Harbour and search that on YouTube. And you can watch all these episodes as well. But if you're a good old-fashioned radio, stick around for the next hour. We got lots coming your way. Important show. And we want to get right into it. Welcome to Hard Money. This is what we're doing today. Bit of a crazy week, Darren. A lot of stuff happening on Monday. The markets got a bit crazy. Give us your thoughts on the week that was, the week in review, Darren. How are you, pal?
I'm well, John. I'm up north, so I
Nice.
am going to have to excuse myself for any sound or lack of sound quality. But as our podcast viewers will see, I'm not in a suit jacket or a dress shirt. We all have to have a break, and I still want to focus on getting things done. But it's been a great week. All in all, there were some signs, and this show is going to be a little bit about the risk tolerance levels being tested and why we think this divergence between what we have in traditional assets for money and the need to really diversify into well-balanced wealth that includes hard assets like gold, silver, land, and other types of hard assets is really important and becoming very important. We talked about contrarian investing a few weeks ago, and we did so for a reason, because sometimes at the very top of a market, you have to look for those warning signs. And when you feel pinned against a wall, which a lot of investors do right now, not knowing what's going to be coming next, nowhere to turn, you want to be sure that the landing when you come off that wall can be softened. And that is simply to say, have a well-diversified portfolio. Monday was a perfect example of that. It was a very uneasy day, John. Many countries around the world experiencing some fluctuations in the stock markets because there were a lot of headlines, and countries were and are continuing throughout this week to express concern about what recovery looks like and whether or not recovery is going to be stable recovery, whether it's going to be, another quick phase of growth. And, there was a lot of talk this week about job numbers, and headlines continue to spread nothing but very unfettered joy about the economy as a whole. Of course, they're doing their job to try and keep people in this game so that all the brokers, the banks, planners, the advisors all get their income, and the rest of the people, the sheeple we call them sometimes, unfortunately, end up being last in, first out, as is evidenced right now in the real estate market. But job numbers and post-COVID stock rallies, all the talk of the town, there was a lot of fluctuation on that, but we witnessed significant mid-morning fluctuations on Monday in the Dow, TSX, and in other major industries around the world in New York time, Eastern Standard Time. And it reminded us once again of how much on the edge the market really is, John. There was quite a shock. We watched throughout the day, and there was a trading shuffle in the large indices, and it was all over the place. And I mean, this for me really solidifies and brings to the forefront two very important points as an investor right now. First, that life is very unpredictable, and having all paper assets in your wealth portfolio, they are very fickle. Monday of this past week was a reminder of that. And the Trump legacy of anti-vax bravado is on full display with a new pandemic of non-inoculated people. Daily US cases have tripled in the last week, and variants are a major concern right now moving forward, especially in the UK and other places. Therefore, Mr. Market, of course, was very concerned that this could hinder growth, despite a lot of very positive news, great corporate profits, and some very, very early signs that there could be small, very significant aggressive jump in the valuations of stocks from here. But equities plummeted, and Monday was a perfect example. Bond yields collapsed unexpectedly, and it's just another reminder for us, John, that you need to be prepared and balanced, and that there remains major risk in abundance in the world markets. And the second point is that we have to remember, as well as all of this risk and this tolerance getting to its utmost highest level, We're a world that's deep fried in debt, and in your employer and going back from your work from home situations, or your country here in Canada, they're not going to come to our savior forever for the rest of our lives. Eventually, those handouts, those lenient ways to get through COVID and this pandemic are going to end. The government largesse in the form of us spending, especially here in Canada, the largest spending nation of the G7, they can't last. You need a plan B. If you stop being enthusiastic about your wealth and you stop paying attention, that's the moment it slips. You've got to put something aside for yourself other than just your paper assets. We believe that the physical hard assets are the best and that those are the ones you have to look for. So ultimately, as my phone rings and we have more clients here, we are seeing that occur. And that's where we are, John, right now. So not a bad week for the markets, but Monday was a real test for sure.
Again, 1-888-335-8645, deltaharbor.com. Anytime to have a chat with Darren and his crew. They're ready and get started in some of those hard assets, at least increase and sure up your portfolio with hard assets as well. Based on what you just said, that opening salvo there, Darren, how did gold and silver fare this week?
Well, not too bad at all, John. To be honest, silver did pull back a little bit at the first shock on Monday and sits right now range bound, and it tested the high 24 range on paper. It's in the low 25 range right now, and it has presented all week our clients with plenty of opportunity coming out of the 26 range just 1.5 weeks ago. The $25 range for silver is a very, very strongly supported range. It's one where we've been doing the bulk of our buying over the last 2 to 3 months, and this week is no exception. Big congratulations, obviously, to new clients and people who've just come aboard. And we've been encouraging a ton of that to happen in that range. We felt very comfortable with $25 range. Well, gold, on the other hand, John, it was the metal of the week. It held its ground, stayed above 1,800 in paper, barely had a little tiny pullback. And I really think this is where we start to see, and as we discuss further on today's show, this whole concept of a mentality change around hard assets and what insurance is and how to protect your wealth. And it starts with understanding that assets like gold and silver should be part of your portfolio. So our hats off to gold as the metal of the week. You know I love silver, but this week gold takes the hat. And certainly as we talk through this show, we're going to touch more on how great gold was this week and how good it could be for you as an investor.
Well, yeah, well, and we'll also talk a little later on about how to get your hard assets going with Delta Harbour physically, how you actually do it. But the silvers didn't fare as well this week. But that's your favorite metal because it's an industrial metal and it's still way undervalued.
Very undervalued, and certainly when we have that discussion, we talk about it all the time. Silver is half the price it was in 1980.
Mm-hmm.
And you might have to say that twice as an investor, somebody looking for something of value, somewhere to put your money, to hold value. You're getting an asset which, along with gold, has stood the test of time. It's been around for thousands of years. In the investment world for hundreds of years. It's stood the test of time in terms of demand. It has very, very few resources right now in terms of supply and demand. We'll talk about later in the show. And it is an industrial metal, John, first and foremost. We don't think of silver like we do gold in terms of a currency as much right now. Down the road, we could. But ultimately, because of that industrial demand in both good and bad, boom and bust, we can't live without it. It's a metal you have to have. Within the next 10 years, we will hear about severe shortages. You will need to stand in line to get your metal for very long periods of time. And that all starts with understanding that story and where it comes from. So I love silver. And again, gold this week was the metal of the week. So we'll talk about both in the next segment, how to get into the markets, both of those metals from Delta, easy to get into.
And we'll have that conversation on risk coming up in the next segment as well. But first, got to take a short break, as you know, 1-888-335-8645, pardon me, and deltaharbor.com, harbor with a U, because this investment, as always, every week is all about you. Reach out to Darren and his crew and get started. We'll continue. This is Hard Money on Sauga 960. All right, welcome back to Hard Money. Darren Long is your guy, giving you all the information you need. You're looking to expand your portfolio. If it's decent, okay, you want to increase it, make it even better, get some hard assets in there to hedge what you've already got. That's what we're talking about with Delta Harbour, deltaharbor.com online. and 1-888-335-8645. First segment, Darren, was good. A lot of education already in the first few minutes, but we have increased risk as well in many forms in a market that is more on edge as of late. What are some of the risks you're watching right now on your end?
Well, I'll tell you right now, John, I'm looking out my window and I'm watching the risk, which is my children as they swim in the lake as I record from up north. So again, an apology to those that are listening if the sound isn't great, but debt bubbles, John. It's one of the biggest problems right now. We've gone through a major phase again with quantitative easing where the media has not put as much emphasis on the importance of understanding that this type of money printing leads to problems, one of which we're seeing right now. And John, we've known each other long enough. I've touted this notion of the possibility of inflation since 2008, when money printing really ramped up after we experienced the huge financial crisis back then. And I have been talking about it ever since. And I felt somewhat as though that this argument for inflation, in support of inflation, was put off because the governments were doing everything they could in their power to keep it under check, because the last thing they wanted to do is raise interest rates. They knew it would kill any type of recovery, so they couldn't let inflation be a thing. But as we are here in 2021 in July, it is a problem, a huge problem, and those debt bubbles contribute to it. Quantitative easing and the end of it, or tapering of quantitative easing, as many governments around the world, including ours here in Canada, are now engaged in discussion of or actively participating in terms of pulling back the amount of money they print, and how fast it's going to be tapered are significant problems for our market. And I think that that is a balancing act that's being played out before us. So we want to have quality hard assets like physical bars of gold and physical bars of silver at our disposal that are liquid, in storage, or held in safety at home, however you like, as a combat mechanism against those problems that are going to occur. So that's definitely one risk we're watching. And we don't know how long it's going to drag out. And we don't know how long the taper will be. How quick can we taper this quantitative easing, if at all? Maybe governments are going to have to go right back to it and ramp up the money printing presses again. But in addition to those debt bubbles, one thing that low interest rates has also contributed to is a housing bubble. Mm-hmm. And that housing bubble is severe, especially here in Canada, one of the most significant, if not the most significant housing bubble in our history, and certainly active in the world right now, especially the G20. We've arguably, in case people don't realize it, we've arguably come to the top of the market, which was March of this year. And house values are slowly tapering back. Again, still presenting more value, but they're tapering from their highs. So people are still making money, and those gains are being recorded and discussed. But there's not going to be $1 million home right now that, in 6 months from now is worth 1.9 million just because, no upgrades, no nothing, just sat on it. In 6 months, it's worth 1.9 million. That is come and gone, I believe. And again, another warning sign, a risk, if you will, that could come down and that could severely hurt us. When we take into consideration where we are in terms of the housing market as a risk, John, about 90% of people right now cannot afford to buy a new home. So if you say that again, that only 10% of the people can afford a new home, that's a shocking revelation. And I don't think it's one that people understand. If you currently own a home, consider yourself among the very lucky to have bought a house at a reasonable price, at hopefully a lower locked-in interest rate, and don't touch it. It is your most valuable asset, your primary investment, the largest one you should have in your portfolio. Pay it off, pay the mortgage down. Don't go buy another investment property unless you can afford to do so. Again, don't take my word for it, but it's among the risks we're watching. And then, of course, we mentioned inflation already, John. Inflation is still here. It's still rearing its ugly head everywhere we look. But now it's documented inflation. It's not just a discussion or a theory or an idea or concept. It's documented inflation. Threats in food, gas, oil, clothing, basically all living essentials that are associated to any type of transportation or overseas manufacturing. It's all rising in cost. Prime example, yesterday we're up here, and of course the boys want to have some pizza, a little luxury item. Every now and then we'll order in. So we order in from the local place, and it comes and it comes with breadsticks. And I won't say the people who created it. And my son's sitting there and he grabs one and he goes, boy, these are sure small, aren't they? And again, right there in and of itself, that's shrinkflation, and nobody realizes it. But that is one of the major risks that we're a part of right now. And this whole problem with inflation is that as costs rise, manufacturers decrease the amount of product that you get. Can't really do that in clothing, although some would argue it is happening, that a large shirt is now a medium to large shirt, or extra large shirt is now large to extra large, and so forth. But it's happening in the food industry for sure. And that is a huge threat. And then again, this week we saw everybody touting the brilliance of the job report numbers, but this is a problem. And the job report really only talks about jobs being created. It doesn't say what the quality of those jobs are. Turns out almost 100% of them were part-time jobs. I mean, an economy can't survive if it's nothing but part-time jobs. It's got to cycle itself through into career positions. So that and more risks all point to the same thing, John, which you know as well as I do. We have to focus on those risks. We have to get ourselves prepared for what might come after it. Not saying don't own the stock market, not saying don't own real estate. We're saying combine it all together and add quality hard assets like gold and silver. Physical bars of gold, physical bars of silver. Do it through Delta.
Yeah, 1-800-335-8645 to get started would be the way, Darren. Yeah, it's interesting. To your point, I was in the grocery store we always go to the other day, and I always buy those slabs of watermelon for my daughter. They were historically $4.5. They're $8.5. I don't know what happened. They're $8.5. I've walked away from it. It's insane.
John, you have to, because these are the warning signs that are all around us. And shopping is the same thing. Remember when the onset of COVID occurred? I went from having a week-to-week shopping plan in place, which was averaging for my family of 5, roughly in the neighborhood of around 300 to 400 per week. Okay, some premium items that my family likes to have on a week-to-week basis, but mostly just your bread and butter type of purchases, all in the regular food items that we put together for our weekly meals. By the time the first, second, third month of COVID had hit, we went to doing all the shopping, taking the risk to get out in the community because we were unsure of where that was going to be. And that shopping bill rose from 300 to 400 weekly to around 500 to 600 every week. And that happened for a while. And then, of course, when transportation problems occurred, inflation sets in, shrinkflation starts to hit food items. That's just one example and one risk, but it is an area that's very important to understand. If you are an investor, you need to own quality assets. We said in the first segment, one of the most undervalued assets in the world to own is silver. But as we're saying on this week's show, risk tolerance is at an all-time low. We're uncertain about where these tops are going to be. Stock market tops are very close at hand. Real estate market's very close to the top. And if quantitative easing slows, inflation sets in, we're going to have the recipe for a perfect storm. So why leave yourself unprotected? If you have disposable income, if you have the wherewithal, if you've made money in other markets that can now produce profitability, bring that money over to other markets, add hard assets, add liquidity in the form of gold and silver, tangible assets that you can hold, touch, move anywhere around the world, and are of value during these periods of times.
Well, you mentioned the word protection. That's where we're going to go here. And we'll also a little later on tell you exactly how you get started with Delta Harbour. So stick around for that as well. Reaching out 1-888-335-8645 and deltaharbor.com. We'll continue. This is Hard Money on Sauga 960. Thanks for sticking around for the duration. We hope you do to the end of the show. This is Hard Money. Darren Long is your guy. John Scholes here as well. We are discussing hard assets, how to get them into your portfolio and your wealth portfolio. If you haven't got any hard assets like gold and silver, we will educate you in just a bit here on exactly how to start and get that happening with Delta Harbour. In the meantime, you want to reach out to have a chat with Darren or Rob or Roy, member of the team, about getting started, educating yourself even further beyond the hour of the show. 1-888-335-8645 and Delta Harbour, Harbour with a U, deltaharbor.com. So we know there's some risks. We've been talking about risks since we started it. Well, we talk a little bit about risk every week, Darren, but we have talked about it this show already. And you mentioned the word protection near the end of the last segment. How do we go about protecting ourselves in that regard?
Well, this week we're going to pick on gold. We love silver. I personally, it's my favorite metal, but this week gold was the winning metal, hands down. stayed right in there, held very strong price wise. We're happy to have clients who love gold, and of course, most of our clients do want to own gold. We're looking at softening markets, John. Even though we think it's likely going into the fourth quarter, we're still going to have some growth. We're still going to be talking and seeing headlines that tout growth in the economies worldwide, the G8 in particular. There are some very serious risks that we've discussed through the show today. Tapering of quantitative easing, housing bubbles, stock markets being at the top, valuations being far greater than they should be, and who's buying those stocks, right? I mean, the insiders, if you look at the data, it tells us that the insiders, those that own the companies that were buying the stocks when they were low, are now selling the stocks on a high. And when that happens, it's the first shot across the bow. So as this market softens, we want people to be reminded that gold is safe. Gold is safety. Gold is safe haven. You've heard it so many different ways. And I'll sit here till I'm blue in the face, and I'll talk with any planner, advisor, economist, and we will compare our notes on the last 20 years that I've been around this market, where gold has averaged 8 to 10% per year. And that's data that exists. That's not even touting what might happen going forward. That's just in regular old run-of-the-mill currencies, all the big ones. Gold has performed extremely well. And that is in boom and bust. That is through a financial crisis. And that is now at the peak of another cycle where it is more than likely we see recession in the next 24 months, where it's more than likely inflation hits higher than it has in the last 20 to 40 years, where it's more than likely home prices in Canada are not going to land softly, but in some regions, especially the areas where people moved to, thinking that work from home was going to be the new way of life, now are going to be sadly mistaken, because employers are going to call people back to work down to the cores where they should be, which is where we function best if we're trying to build businesses and run an economy. So those things all around us are risks, and to have protection, to get into these markets and protect ourselves, John, it's very simple. Diversification, meaning got to have some gold and silver, have some other hard assets. If you can afford to invest in land, raw land, maybe develop projects. I wouldn't be the type of investor right now. Me personally, I'm not going to be buying a house right now and either renting it out or adding it to my my portfolio, or not renting it out and letting it sit there for the next 6 months, hoping I make return. I'm not going to do that, because the smart money is not doing that. Not because I don't think it's a good idea. I do think it's a good idea, but right now we're at the end of a cycle. So you want to have that. You want to have collectibles. You want to have rare spirits. If you know about that industry, it's a very, very fickle industry. But if you know, and if you've done your due diligence and you understand it and you're savvy about it, that could be an area of great interest. Rare cars, things like that. But gold and silver is the mainstay for us. And then on top of that, you understand balance. You can't have too much of one thing or the other. You want to have many eggs in many baskets and be well spread out, John. That's the key for having the ingredients to make the recipe and to put the food on the table. That involves gold, silver, all those things we talked about, plus the traditional assets. And you want to shave off risk. Risk is a very, very big one, John. You want to take risk down to a minimum. If you have ownership of very high risk assets or investments, you want to shave that off right now, because lending is going to get more expensive. So if you have to borrow to cover the cost of failed investments, it's going to get very costly. If you have to borrow money going forward, or if you have to use your credit or lines of credits, they are going to become more expensive. So we want to shave the risk down as much as possible. We want to own quality assets. If you're going to own gold and silver, you're going to buy it, own it physically, own it in bar form, put it in storage, put it in your RSPs, your TFSAs, use Delta, use us to do it. It's a very, very simple thing to do. It's not for everyone, but every budget can be fit, from small cost of silver coins or bars right up to, 10 1 kilo bars of gold that can be put into a portfolio. And, that's the way we protect ourselves as a whole.
1-888-335-8645. We like to give the number out throughout the show just so you can write it down and, piques your interest. You want to give Darren and his team a call. DeltaHarbor.com. Learn more online as well. You can also open an account there as well if you want to get started on your own with some hard assets. So you've talked about it a bit already, but okay, so why gold? I know silver's your guy. Silver's your favorite metal, but gold can't be ignored, right?
Well, it can't be ignored. And truth be told, the majority of clients that come to our firm buy gold. The majority of them, 90% of them, buy gold, not just silver. They buy both metals, maybe, but certainly their knowledge is around gold. But there are some key ingredients and fundamentals in both gold and silver. But again, from a gold perspective, we'll talk. And really, when it comes down to it, there are four basic fundamental reasons why we own gold and silver. And really, it's important to know that, because as an investor, you want to do your due diligence. You want to be educated. You want to be smart. But you don't want to make blind investments. And I'll bet you most of the people listening to this show, John, myself included, have at some point in time put money into a market, given it to somebody a banker, planner, advisor, and never asked what it was going in. Just told, this is the fund you own. Are you low risk, medium risk, high risk? What do you want? Balance. What do you want? Throw it in there. No more questions asked. And you do it every month. So people all over Canada are contributing hundreds, if not thousands of dollars per year to their RSPs, to their TFSAs in investments they had known nothing about. But we trust people. So when we come down to it, we want to do due diligence. The reason we like gold and silver, four basic reasons, and all of them are very important to understand. So with gold and silver, we look at currency devaluation. What is the value of my money? Can it buy more or less than it did 2 or 3 years ago? Right? The talk of inflation, the talk of money printing, all that goes hand in hand. But fundamentally around the world, what are currencies doing? Right now, currencies, although they went through a period where they strengthened in the last 10 years, as of the last 24 months, they've hit a plateau and now they're coming back down again. The US dollar is a prime example. Again, the Canadian dollar is fluctuating against the US dollar, and more recently in the last few days, it weakened and then strengthened. But on the whole, the largest currency of them all, the US dollar, is the one that we're most interested in. It's falling in value, and you have an inverse relationship whereby gold goes higher when the US dollar falls. And that has been a relationship that has lasted through the 1970s until now, and even further back than that. But as the reserve currency goes, gold does the opposite. So we're watching those things right now. And when we get back from break, let's focus on the other three, which is the threat of inflation, geopolitics, and supply and demand. How much gold is there in the world? Where it's coming from? Is the supply dwindling? Those are all great questions as they pertain to gold, and silver is part of that as well. But what you have to do is understand that this is a time when risk tolerance is teetering at the very peak. We need to be protected. Be smart. Take that what you can afford to invest and put it into markets that are smart. Hard assets. Diversify your wealth. Own some gold and silver. They're undervalued and they stand the test of time. Going forward, we believe they have an excellent opportunity to gain value over the next 36 to 60 months.
The four basic fundamentals to owning gold. That's what we're going to continue with when we come back. And then we'll talk about how you actually get started and doing it with Delta Harbour. We always get to that part of the show as well. In the meantime, 1-888-335-8645. That would be the number, and online to deltaharbor.com. Delta Harbour with a U, because it is all about you and how you get started. We'll continue Hard Money right here, Sauga 960. Welcome back. This is Hard Money. Darren Long, always your host on the show, filling your mind with the knowledge you need to know to expand your portfolio in the form of hard assets. We focus mainly on gold and silver. There is others, which we have special guests coming on the show from time to time about expanding your portfolio in that regard. But the focus this week really is the winning metal from this past week. Darren, you mentioned off the top, and that was gold. So wanted to get down a little more brass tacks as opposed to gold tacks as to why to own gold this particular week. You were talking about the four basic fundamentals and the reasons for owning the focused gold this week. First one was currency devaluation. You want to talk the threat of inflation. There's geopolitics, there's supply and demand. So much more to get through this segment. So take it away, pal. Where's the next one?
Well, after currency devaluation, after we look at the money printing, that money printing leads to something called inflation. We're experiencing it right now. You can't go through two bouts, which was the great financial crisis of 2008-9, where money printing went through the roof. look at any chart of any G20 country, and you will see that it literally was going like this, and all of a sudden, or like this, and all of a sudden, boom, straight up. And it's the same with US and Canada. Our money printing went off the rails. And here again, when COVID hit, the second such instance of that happening. In Canada in particular, it's a very interesting study, because if you look at last year, prior to 2020, we had this tremendous history of having fairly balanced wealth right up until Harper's 2008, the financial crisis, where he spent around 54 billion. Never been done before, but he said, "Oh, 54 billion. This is crazy. This is crazy money. Where are we going to get? How are we going to pay for that? It's taxpayers." But we had to save ourselves. Like every other country, we had to put newly printed money, bond buying programs. We had to put governments to work for us in order to protect the economy and our too big to fail institutions. During that time, Canada could have just invested in gold and silver over the next 36 months and made a fortune, a killing for their people. They could have just literally taken gobs of gold and just stored it in a vault and sold it at the top and said, "Hey, we put your money to real work. We didn't do these complicated, stupid things like bond buying programs and support these too big to fail institutions," which should have failed, by the way, because resets are what we needed so that the actual taxpayer benefits and not the institutions and the people running them. But ultimately, that currency devaluation and that money printing, which last year we went from Harper's 54 billion in 2008 to 380 billion last year. I mean, and now pressing 400 plus billion dollars. Where do we get the money to pay for this? This is some magic tree it's going to grow on in Canada somewhere? No, you, the taxpayer, are going to pay for it. I'm going to pay for it. John, you're going to pay for it. If you're listening to this radio show, you are going to pay for that debt. Your children's children will pay for that debt. If you don't make smart decisions about your money, your average 9 to 5 is going to get cut down by 20, 30%. Your cost of living is going to rise dramatically, as it already is. And that income that you have is going to go less and less as far. So that dollar is not going to buy as much. And that's that threat of inflation, John, which is creeping its ugly head in right now. Gold is safety, it's insurance, it's been a hedge against inflation, the threat of inflation. Let's make that very clear, John, that when we talk about these fundamentals, a lot of companies talk about inflation being great for gold and silver. If we are in the throes of inflation and interest rates get to 10% or something ridiculous like that, mortgage rates get to where they were in the early 80s, up near 20%, gold and silver may not be the right asset for your portfolio. At least history tells us that. However, the threat of inflation, like we're seeing right now, where the preferable rate of 1 to 2% per year on the books, as far as federal central banks are concerned, starts to become 2 to 3 or 3 to 4, or in the case of the US, as high as 5% last month, then we start to see that threat playing and wreaking havoc on the system. And that threat will lead people towards assets like gold and silver. Case in point, it's no surprise to me, it's no coincidence that at the same time inflation starts rearing its ugly head, John, we start to hear about shortages in silver and gold. Some will call it small bar shortages, some will call it rationing, but it's no surprise that the demand ramps up because the astute people who just simply took a look at what happened the last time this occurred realize that assets like gold and silver and others like real estate, like we've seen, are good quality assets to own. So we look at the threat of inflation. We have to think about gold being safety, it's insurance, it represents opportunity for growth. And we pile that all in there. So we've got currency devaluation, and we've got the threat of inflation. In addition to that, John, we have geopolitics. And geopolitics, when I first started this back in 2002 to 4, in that range, geopolitics meant regional disputes. So if we saw regionally in the Middle East a dispute, it meant the countries surrounding that area might be buying gold, and you'd see central banks around that region buying gold. But since 2009, geopolitics has taken on a whole different meaning. Not only do we have domestic threats galore all over the G20, but we also have the polarization of democracy. We have the internet causing all kinds of uncertainty as to what is right or wrong. Do I read into this or go down that rabbit hole? We have the politicization of COVID, at least in other countries like the US, not so much here in Canada. And we have the increasingly problematic numbers and resurgences of variances that are relating to COVID. And COVID is probably the single largest geopolitical problem we have facing the world right now. So people want to protect themselves. Whole countries want to protect themselves. And it's why since 2009, central banks around the world, with the exception of our poorly banked here in Canada, have been net buyers of gold, and they will continue to be so for the foreseeable future. What are they doing? Why are they doing it? How come they're not telling their citizens? How come they're not spreading that good news around? Well, the fact is, they don't really want too many people to know about it. And that's just a fact of life that we have to deal with, because they're doing it to protect themselves, and they don't want to lose the value of their paper assets. They start touting the value of owning hard assets like gold and silver. They start losing the value of their paper assets, and whole economies are built on the notion that we'll buy that paper, we'll use that credit, we'll buy the stock certificates, all of that paper, that flimsy paper, which we can't live in, which we can't eat, just like gold. But because it pays a 1 or 2% guaranteed dividend, we buy it hand over fist, thinking it's the greatest thing since sliced bread. So ultimately, that's also part of it. The last, John, is supply and demand.
Right.
How much gold is there? How much gold do we have? Is there going to be enough to go around? With silver, we already know that the majority of it, 80% of it coming out of the ground every year, is a byproduct of other types of mining, primarily because the price of silver is too cheap to push miners towards investing in properties around the world that will produce silver out of the ground. Costs of mining are way too high. If we're going to mine the ground, let's mine for gold. Let's mine for other types of precious metals. So when it comes down to gold, there's not a lot of mining happening. We've hit peak mining. We don't have a lot of geological areas around the world where we can just go and throw an excavator and start digging the ground and hope for gold. We're seeing the gold rush again because of the pricing. We're seeing lots of people try, shows that come up everywhere, but ultimately supply and demand dictates that there's just not enough to go around. This is why we'll never return to a gold standard. We have lots of people that talk about wanting to return to a gold standard around the world. We can't. There's not enough gold to cover the amount of bloody printing that the countries around the world have done. So even if one country wanted to return to a gold standard like Canada or the US, you can't do it. There's not enough gold to support the amount of paper dollars that have been printed. So ultimately, when you compact those all together, John, you put currency devaluation, the threat of inflation, geopolitics, and supply and demand. Those are historically the four major fundamentals which drive us to the conclusion that gold and silver are safety. They are a safe haven. They are a hedge against the effects of what happened to paper markets when economies crash, when markets crash. To own it is very prudent. It's astute. And I think that people should be more cognizant of it. Delta can help people. Gold bars, silver bars, TFSAs, RSPs, we'll talk about when we come back. But ultimately, you got to get into these markets and examine them, find out for yourself, and add them to your portfolio as a way to balance and take away that risk.
It's a fascinating conversation. To have a further one, which you probably should with Darren, just based on that last segment alone. Fascinating. You want to reach out 1-888-335-8645, deltaharbor.com, and we'll do exactly that after a break. How to start that part of your portfolio with hard assets from Delta Harbour in the form of gold and silver. That is coming up. This is Hard Money on Sauga 960. All right, welcome back. Hard Money. John Scholes, Darren Long, as always, above all, educating you on these hard assets, gold and silver, and how to expand your already bolstering portfolio. Maybe it's doing pretty good, but you want to increase it. Always look at hard assets in the form of gold and silver. So let's get down to it. 1-888-335-8645 is the number. Delta Harbour with a U.com is the website. Darren, take it away. We got a few minutes left in the show this hour. How do we get that portfolio happening?
Well, we've talked about risk tolerance all day today, John, on the show, and it's an important point. It goes hand in hand with the topics we've been discussing over the last few weeks, that of diversification and contrarian investing, which we all think are very, very important parts of the puzzle when you're going to take that next step and when you're going to add more value to your wealth strategy as a family, as the head of a family, as a mom, as a dad. Doesn't matter who you are, an aunt, an uncle, a cousin, a young investor. There's always an avenue to improve wealth just by simply doing your due diligence and looking into getting into the market. With Delta, we make it really easy. John, the easiest way to buy gold and silver is to simply go to our website, deltaharbor.com. You can open up an account there after you've done your research and due diligence, or combined it with that which you've done elsewhere on the internet. You can have a conversation before you open up the account. Just simply call us. There is no waiting. There's no hassle. You can set up a 30-minute consultation just to ask some questions about product accounts and things like that. And once you're comfortable, you simply open up an account. Give us your details. Tell us who you are. Let's commit to starting a relationship and getting to know one another. And you can just take direct delivery. Fund your account, put some money in your account, and buy some gold, buy some silver, buy both metals if you like, and have it shipped directly to you. That's not a problem. Anything over $1,000 in purchase is free shipping anywhere in Canada. So we'll make sure that it gets right to your door or business. That is the simplest way to do it, John, and it's the one that is used most often. If you want to add a little more safety to that, maybe a little more liquidity, you want to just not be too worried. You want to sleep at night, and let's say you're adding a sizable amount as an investor, 20, 30, 40, 50, $100,000 worth of investment into gold and silver, it might be advisable to think about a storage option. It is not costly. In registered accounts, if you're putting, which we'll talk about in a minute, gold and silver into storage, 1.25% of the metal value per year is charged on a monthly basis. If it's outside of there and you just want to own some gold, own some silver, put it into a vault, our storage rate starts at 1%. And again, that's per year based on the value of the metal you're holding, and it's broken down by month. So you get a monthly bill, and it's not very costly. You can leave some funds on hand if you like. And then, as I said, we tickled that notion of registered accounts. If you are an average investor, which I know you are listening to this, I know you are owning RSPs, TFSAs, liras, RIFs, lifts. Those are all eligible for having physical gold and silver in them. And if you are currently with another institution, you can migrate it over. There's no cost. There's no tax implications, no nothing. Just bring it over. Questrade, our partner in registered accounts, will cover the cost up to $120 for the cost of migration if your institution charges a fee for moving your money. If not, which many don't, you can start fresh, brand new TFSA, put money into it, next year's contribution, this year's contribution. But if you've never had a TFSA, remember that's gold and silver, tax-free, right? No capital gains, and it's tangible. And when you're done at the end of the day, you might choose to sell it and take it home in cash, or you might choose to just take it home in physical bullion. You can do that in any registered account. We can set that up for you. Liras that are locked in, or pensions that are locked in form of liras, RSPs, you can bring those over too and have gold and silver. And about 99% of all variances of those types of registered accounts that already exist at other institutions in your name can be brought over to Delta, and you can bulk up your holdings in gold and silver and have a real tangible asset, physical gold bars from Royal Canadian Mint in your registered account. That's also an option. John, beyond that, we have another option for people that really don't want to hold product. They don't want to be getting involved with storage or anything like that. They just want to be able to say, I have exposure to physical gold and silver. We call that our bulk bullion program. That will lessen your costs, premiums on the specific type of bar or coin you're buying by just owning bulk bullion, not caring what it is, whether it's bars or coins. You can still see that it's tangible. You can still take it home and convert to 10-ounce silver bars or 1-ounce gold bars if you like, whatever you like. But while you're holding it at Delta in the bulk bullion account, you're not going to be charged any high premiums for bars or coins because of the way the market is structured. You'll get the most cost-effective way to get into physical gold and silver that I can think of. And in the bulk bullion account, John, you can finance up to 80% of your purchase. Means you can take 1 ounce and turn it into 3 ounces if you're the type of investor that qualifies for such an account. If it's for you, you have the extra disposable income, boom, this is a great account. Start with bulk bullion. If you feel confident enough that the prices are going to rise, you're enjoying what you're doing, you're seeing growth, you can then add some leverage to that by having the collateral financing available to you up to 80%. And you can really push the envelope a little further for those people that qualify. those are all options for us, John. Those are all ways to get into the market, and we make it super easy to do so. And opening up that account, as we said, John, starts with a phone call to Delta or going to the website.
No stone left unturned or gold bar left unturned in that case, Darren. All kinds of options there. Last minute, it's there's lots of guys in the block. You guys are arguably the most transparent and the best at it. But why would I choose you guys, Delta, above anybody else?
Well, we take to heart the idea that the customer comes first. I don't know how many times we can say that or what we can do to prove it other than to connect with a person and let us show them that we're here for them, not the opposite way around. I find my experiences over numerous businesses in the last 20, 30 years being part of the bullion world that far too often the firm is there to make as much money as they can and not to have to worry too significantly about the client. That's what you'll find in the bullion industry, even in the investment industry. We're here to talk with the client. We're here to consult with the client, to give our expertise. We're not your financial planners or advisors. Leave that up to the experts you trust in those arenas. But we're here to be experts on gold and silver and other hard assets that we offer. And ultimately, that connection, once it forms, can be lifelong. We can be partners in this, and we can be by your side, helping you through this every step of the way, right down to the simplest detail of what type of coin or bar to buy, how much of each to put into an account. Where can I put this? Can I take delivery of it? All those questions surrounding gold and silver that would otherwise make it a little bit complicated for the average person. We're here to answer those. We've got live discussion happening all the time. We've got tons of social media, great output here so that people can see and feel what's happening in the markets. And John, the best of all is there are no additional management fees. Nobody's taking 1 or 2 or 3% every single year from you for nothing and never getting a phone call like they do in the paper markets. Happens all the time. Not here at Delta. The buck stops here. There's no thick gravy train here at Delta. We keep it simple, and we want people to be part of the gold and silver market.
And that is it for another show. Reaching out 1-888-335-8645, the number, deltaharbor.com, deltaharbor with the U.com. And we'll catch you next time here, Hard Money on Sauga 960.